Imagine selling a dream that didn't exist. No product, no profit, no clue. Just a website and a promise that it might be worth billions. In the late 1990s, we found a way to make money out of absolutely nothing. And the best part? Everyone believed us. They called it the internet revolution. I called it my retirement plan. The world had just discovered this shiny new thing called online. And suddenly, people were willing to throw money at anything with a dot and a com. You didn't need a product. You didn't even need a plan. All you needed was a dream and a domain name. Back then, if you could spell internet, you could become a millionaire. We had companies like pets.com, Webvan, e-toys businesses that lost money faster than they could print stock certificates. But nobody cared, because in the 90s, reality didn't matter. Hype did. It was a time when profit was considered old-fashioned, revenue was optional, and logic was the enemy of progress. Investors, analysts, journalists, they were all hypnotized by this idea that the internet was rewriting the laws of economics. And we, the bankers, the brokers, the visionaries, were more than happy to play along. We'd take these fresh-faced founders in hoodies, sprinkle some buzzwords like synergy, digital, and revolutionize. And boom, instant billion-dollar valuation. They'd pitch us a website that sells pet food online, and we'd nod seriously, pretending it was the second coming of capitalism. And then we'd sell their stock to the public, to people who didn't understand a single thing but wanted to get rich fast. You know what's funny? We didn't even lie. We just didn't tell the truth loudly enough. The mantra of the time was simple: get big fast. That was it. Didn't matter if you were burning through cash like a bonfire in hell. As long as you had eyeballs, you were golden. Eyeballs. That was the new currency. Not dollars, not profits. Just attention. We used to sit in meetings talking about eyeball metrics with a straight face. And the best part? Nobody dared to question it. If you asked for a balance sheet, you were old economy. If you mentioned profit, you were a dinosaur. And no one wanted to be a dinosaur. It was glorious. We'd take companies worth nothing, dress them up in tech jargon, and watch the stock price skyrocket. It was alchemy turning hype into gold. Every day, there was a new IPO, a new miracle stock, a new next big thing. People were mortgaging their homes to buy shares in companies that had never made a single cent. Taxi drivers were giving stock tips. Teenagers were trading online. And the market, the almighty NASDAQ, just kept climbing. Everyone was getting rich, at least on paper. I remember one kid, 24 years old, wearing flip-flops in a board meeting, who told me his website was going to redefine human interaction. I asked him how he made money. He said, "We don't. Yet." And then his company went public at $1 billion valuation. It was beautiful chaos. And we, the bankers, were the ringmasters. We didn't create value. We created excitement. And excitement is worth billions at least until someone asks questions. Then came the year 2000. The NASDAQ hit 5,000. And suddenly, everyone was rich, smart, and invincible. Which, of course, meant it was time for the crash. Because that's the rule of bubbles. When your hairdresser starts giving you stock tips, it's already too late. It started small. A few disappointing earnings reports. A few analysts admitting, maybe this company doesn't actually have a business model. And then panic. Investors realized the internet wasn't going to replace common sense after all. And they all rushed for the exit at once. The NASDAQ collapsed. Billions evaporated. Companies that were worth fortunes one week were worthless the next. Pets.com, gone. Webvan, gone. E-toys, gone. $5 trillion in market value, gone. People were shocked. We weren't. We'd already cashed out. That's the trick. You sell the dream. You let everyone else buy the nightmare. When the crash came, Wall Street cried crocodile tears. We didn't see it coming, they said. Of course we did. We built it. We created a market based on fantasy, and then acted surprised when reality showed up. But here's the secret nobody wants to admit. The bubble wasn't a failure. It was a test. It showed the world that you can sell nothing if you package it as the future. And we learned. We learned that hype is the most valuable commodity on earth. It's renewable, it's addictive, and it never really dies. After the dot-com bubble, everyone promised to be smarter, more disciplined, more responsible. Then came the housing bubble, the crypto bubble, the AI bubble. Different products, same story. Because bubbles aren't accidents, they're business models. You inflate, you sell, you escape, and then you pretend to be shocked when it all bursts. The dot-com bubble was a masterpiece. It turned speculation into religion. It turned ordinary people into gamblers. And it turned us, the financial elite, into gods. People lost homes, savings, and jobs. We lost nothing. In fact, we gained experience. Every crash is just a rehearsal for the next one. Every failure, a blueprint for another scam. You see, markets don't remember pain. They remember opportunity. And greed? Greed has the shortest memory of all. We told ourselves it was about innovation, but it wasn't. It was about extraction of wealth, of hope, of sanity. We monetized attention. We monetized hype. We monetized nothing. And nothing, my friend, pays incredibly well as long as you sell it fast enough. The dot-com bubble didn't end capitalism. It perfected it. Because in the end, money isn't about value. It's about belief. And back then, belief was the most profitable thing in the world. When people ask me if I regret it, I tell them this. Regret is for investors. I'm a banker, and bankers don't learn. We just rebrand. See you in the next bubble. Oh, and trust me, it's already inflating.